Hello, 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 hello. Happy Thursday, Unemployment Thursday, PPI Thursday today. How's everyone doing? Good morning, Patrick. Oh, it's 314. It's Pie Day. Thank you for pointing that out. I could go for a nice piece of pie. 3.14159. John, how are you doing? Again, but it's Pie Day and it's PPI Day. Thanks for putting in all the information, Sterling. Good morning. Good morning, good morning, good morning. So I got to scroll through a bunch of stuff where we had a busy morning today. Good morning, Jacob. Good morning, Heinrich. Good morning, Anissa. Oh, thank you for tuning in and saying hi on the Tradier stream yesterday. Thank you for being there. Any thoughts on it? Any thoughts? George, how are you doing? What else? Good morning, Mark. Hey, Richard. Hello, 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 Kalani. So, other people are coming in here too. Does anybody, if you did see the Trade Your stuff or watch on YouTube, could somebody put the YouTube link in Reddit? Reddit. In Discord if it's not in there already. Cutie Pies. William is back. William's back. Hey, Eric. Trader was also been wondering for weeks now how to sell and buy tech. It has been sell vol. No, it's not just buy tech, it's buy momentum. But the momentum is getting harder and harder to pump. That's why I told you exactly what I'm watching on that webinar with, the equal weighted stuff too. If that starts breaking back down, keep an eye. Keep an eye out. But we don't have time to cover all that stuff. That's why we do occasionally other streams and webinars. Today, the PPI month over month coming in double consensus. And what was it, like 40? What was it? 70% of the rise in February goods PPI can be attributed to the index for energy, which jumped 4.4%. And you keep watching crude, it's been building that higher base, and something really changed with crude. That's going to keep the pressure on. And remember, a lot of it's due to gas too. And we're going into the summer driving season when gas naturally goes higher. So, and if you have crude going higher and gas naturally going higher, it can have a double whammy effect, and that gets passed on. So we also core PPI 0.3 versus 0.2. Initial jobless claims drop in that 209, but these numbers are so weird right now. Continuing jobless claims. Look, consensus was 19K, 1811. Core PPI year over year coming in at 2. What else do we have? I mean, I don't need to go through all these. Just PPI came in hot. PPI year over year expected 1.1 coming in at 1.6. Retail sales year over year coming in at 1.5 versus forecast of 1. Where's the month over month? Retail sales month over month coming in at 0.6 versus consensus of 0.8. Now, it did bounce back from prior, but prior was actually revised lower also, and this coming in weaker than consensus. So, sort of really stagflationary numbers from my perspective, probably not the market's perspective because it's still in. Let's just shrug off all the information. Hey, Christoph. Can somebody else put in Discord? Like, yeah, if somebody could put it in there. Oh, Eric posed. Thank you, Eric. You guys are so wonderful. It was a great show. Well, thank you, Anissa. I hope there was something I covered that was new. Yeah, it's the PPI numbers weren't good, and if energy stays high, I mean that flows into stuff really rather quickly. So the S&P 500, Nvidia. Let me just click on the refresh here. Nvidia down a bit, but the other mega caps, at least holding up going into the open. Besides Nvidia. So we'll keep an eye on that. The groups, let me just do a refresh in here too. Utilities and comm services leading higher, real estate pulling back. Nothing's really, I mean, utilities up and comm services, but nothing's really rocking and rolling this morning. Let's just see if this changed also, because it was at 3 rate cuts earlier still priced in. Just want to check if anything's changed in the last 30 minutes. We still have 3 priced in. So markets still, and that's what Powell said his baseline case was. Now, if they start stressing this next week and just keep shrugging off inflationary data, it, and that would be very dovish because, all right, you're cutting into inflation that's not really going away and it's actually bouncing back. Could get very interesting. Back on the cusp of extreme greed. Dollar General was a beat this morning and a gap up. So very opposite Dollar Tree, which announced closings and not doing so well. On the other hand, Dollar General doing better. So Adobe after the close today. That's really it, and that really winds it down for the week. But that's the bigger one, and more go woke. I don't know if Adobe will go broke, but go woke with Adobe's AI. Did you see any of that stuff? I mean, this stuff's all insane. This stuff is all insane. So, all right, we were running up earlier and now pulling back in the S&P, but the S&P with the back adjusted charts are in double top territory, and the daily rotation zone would be out of the way. You'd still be dipping into the weekly rotation zone. Why do these keep going away? I can't keep the tabs going. But it would be returning to like solidly to the weekly rotation zone. So that's what I'm keeping my eye on. Going into the open, minor resistance now is back at this 52.45. More significant resistance is 52.52. If we break above the highs from last Friday, the overall magnet cluster area is 52.78 to about 52.82. Going into now on a drop, you'll be watching how it reacts at 52.32. You see how it traded yesterday between the harmonics beautifully. Sorry, that was yesterday. And then you had the little drop down holding the 62.5 and then bouncing back up. So I'm gonna keep using these harmonic levels because they are really spot on right now. So 52.32, if that breaks, then I'm looking back at about 52.19 as the next key level, and then 52.07. So that's the structure. What's this? Nvidia shares down 1.2 pre-market after Reuters reports Intel, Qualcomm, Google executives say they plan to battle CO's AI software dominance through UXL Foundation. Okay, I'll have to look into that more readily after the live stream. But here, because people wonder, and I'll answer this now, wonder the significance. If it stalls out here between the 50 and the 62.5, remember that's the rollover zone. But that doesn't put it in double top territory. Why, if it's in the rollover zone, do you not have targets below? Well, we have targets, they're just not based off the double targets. Why? Because once it gets into double top territory and it rises up here, then if it closes below here, it was a little stronger than from the rotation zone. But if this rolls over from the rotation zone and closes below here, then especially we start looking at the longer term charts to find the targets because the weakness is pretty substantial. And we could easily come back down to the 750 area and then the gap fill. Now, as I talked with Bob on the trade here, I'm not in agreement. If this thing pulls back, Bob he'd be looking for a more longer term buy down here, especially with the gap fill area. I'm looking at this more as a Cisco play. And with the information Sterling put in here, even though we don't trade off news, the other companies are going to do something. It's not just going to be NVIDIA dominance forever. And I think AI is overhyped. So that's why I think it's more like the Cisco of the 2000s than, and I'm not saying this is going back to zero or anything else, but could this actually at some point return down to these 500s? Yeah. So I personally, unless there could be short-term bounce plays, but for a long-term hold, I'm just not as excited on it, at least at the higher levels. That's my little stuff with NVIDIA. Now, NASDAQ has still not been able to close above that 62.5. So right now, we got some selling pressure going into the open, but we start breaking below 18,340, 18,340 area, 18,345 area, 18,270, 270 to 280, 276 to 280 harmonic area, and then we're back down, and I'm roughly looking at about 18,200. Below that, it goes to 18,138, and then we still have the double top. Now, it is a little sloppier, but I'll still be looking at that, especially for key pullback levels. And the daily rotation zone on the back adjusted chart is out of the way. Oh, to the upside, same thing. Above 18,415, 18,483.75, especially on a closing basis, and 18,553 and 18,622. Makes it easier when the harmonics line up this nicely. Dow, you see rolling into some safety a little more. So the Dow's up 26 basis points. The NASDAQ's only up 18, the SP 14. So the Dow's definitely in double top on a back adjusted basis. It would need the close, though, below 38,913. We take out 38,970. I'm looking at 39, just above 39,700 as the first area of resistance, then 39,780. And then, what's the key level here? What's the key reverse harmonics? Then we'd be going to 39,886 and 39,999. Essentially 40K is the next major harmonic area. Russell, key breakdown area right now is about 2087. We break down below there. I'd be watching for key support 2072. You lose 2072, we could easily return to the area between the 50 EMA and the rising channel. Okay, because you can also even move up this channel. You can see if you candle bodies, it's only spiked here below, and look at that line up with the 50 EMA. So that's the area. If this double low breaks and the rotation zone breaks, that's where I'm watching with the Russell. The VIX, remember, it's still climbing, stair-stepping higher, but there's no fear. And there's actually no major bounce in the VIX. And I know the argument with 0 day, but the VIX is still relevant. It's just you got to take it in context because people still trade the longer term options. For hedging, are you going with 0 day options? Only on a intraday hedge basis. If I'm hedging something long term, I'm still playing longer term options. So it's still relevant. It's just dropped because there are other shorter term ways to play volatility, but that doesn't mean it's irrelevant. It's just you have to put it in context. The DAX still holding up. I mean, 18,100 is still the next target area. 17,900 now is key support. Notes. Finally, after never invalidating the double, never trading through the 75% harmonic, and never closing above the 62 harmonic after the stop raise, let me take the back adjusted. You can see it right here off because this one's not back adjusted. It's headed on back down, especially with the PPI numbers. I'm saying especially way too many times this morning. Please stop me. Oh boy, I had too much coffee too. We're back to a very key level. Let me take off these other ones first. Right now, I'm watching today, since we're through that other key level I talked about, at least we're going to look like we're going to close beyond it. The one I mentioned on Tradier yesterday, 4.325 is key today. That will take it because we've already gone through the other key level and we're coming up to 62.5. Why is that important? Because we never invalidated the double bottom. We also, interestingly enough, you know, it's look, I mean, this could be forming a really nice, and if I move these levels back, you can sort of see how it extends to the left here. But we could still be running out. It's been more of a painful sit through trade, just as like the Tesla short stuff's been. But nothing is invalidated. Again, no guarantee. You got to trade the probabilities. Dollar index trying to form a very key base. Based off of here on a closing basis, it's now 102.30. But this is trying to form a base here with cycles still rolling up, coming out of the oversold condition. So next level is 102.70 on a closing basis, and then it's really got to get above the rotation zone before I get more interested back to the bullish side, but not invalidating the sloppy head and shoulders yet. Crude, here we go. The double with the move up yesterday was taken off the table. That never triggered. It confirmed but never triggered, catching on the 50 and now moving back up. So you can see how this is still building a higher base. It looks like it wants to break out. And then I'm looking 82.19 to about 83 is my next key area. So it's building a higher base, especially than last November. Keeping a close eye on that. Gold, so far we have a sideways correction. 2150 is still key on a closing basis, but this is working off the major run-up by a sideways correction. So that is still bullish. I listed out. We don't need to go into that. Just watch the trader replay if you want to know if we close below 2150, what I'm watching for. The yen, still seeing if we get a stronger bottoming pattern here, and has to get back above the rotation zone until I'm more interested in any bullish case for the yen yet. I'm going to be watching, though, if we come back down, hold the 200 and form a little double down there. Other than that, this yen's in sit on hands mode. The euro in double top mode, I should say, potential double top mode. May never confirm or trigger, but going to keep an eye on that. Why? Because it's a major component of the dollar index. So if this triggers, we could get more of that bullish base holding in the dollar index, and then the potential rally in the dollar index. But that key level is 109, a close below 109, and that takes it back to the area of the flat 200. Still slightly lower probability against the rising rotation zone. Spiders in double top territory, but a long way off from triggering. I'm using the harmonics and the spiders too. So, by the way, we're looking at 516.66 on selling pressure into the open, 515.97 for the gap fill to 515.79, which is a 75% harmonic. That starts breaking, I'm down to 514.60 area. That breaks, I'm going to the gap up open on Tuesday, which is roughly the 50% harmonic, 513.35 area. So you can structure that same thing with the harmonics from the high of Friday the 8th to the low of Monday the 11th with the 12.5% intervals. If we break back above 517, 518.22, 519.44, 520.65. Good morning, Legion Reaver. Oh, we'll go touch on copper. What's my sentiment on the day? I got to look at some stuff going into the open, and then we'll talk about that. Let me just get through this. I'm thinking the NASDAQ's going to be choppier to bearish, but we're going to have to see if we still rotate more into the things I'm most looking for breakdown plays are in the NASDAQ and in the Russell right now. Any bullish plays, I'm looking in the S&P and Dow. The Qs, still in double top territory. We did not get above that 75 yet. Still a long way off from triggering, but 440.76 in the open, 440.25 for the gap fill. I'm raising this level up to about 439 for the key breakdown level, which then would be targeting 437. Below that, it's 435.50, and then for this key low of 443.65. To the upside, we've got to get back about 443.70 before I can get in overly bullish mode. To 445.34, 447, then are the targets. The good old Bitcoin, this is really running out of momentum, potentially setting up some end of wave moves and DeMark moves. So I'm starting to watch more significantly for the rollover play, but my key level is still 68.3. In copper, which we talked about, and these levels have been on the chart. So yesterday closed above the 62.5. I still want to see this close above the week. We could get a pullback area in here. But if you look at this now, as long as we really don't lose this $4 substantially, and my major line in the sand, if you want a little more information, is back at $3.95. If we were to start closing back below $3.95, it could be into a false breakout in the short term. But the probabilities have shifted for continued higher copper prices. This took a long time to build a base, which is also inflationary. All right. So going to keep an eye on this on a weekly basis. We have Tesla. Remember, this thing triggered back in October, end of October. You got the rally up that never invalidated, and then we got the push down, hitting the first target in February, beginning of February, and now finally breaking down towards the next key target, 162.84. Also remember, I don't know if I pointed out, but on last Friday, we closed below the 62.5 harmonic. So that means the next magnet price area is 151. Okay, and you have these key lows from last April, and then the next magnet price 126.50. So bounces again are shorts from the technical trading perspective. We already looked at Nvidia. What else do we got? Yeah, MHG. Thank you for pointing that out, Sterling. Copper does have a micro contract, and those micro contracts are fantastic. They're fantastic. They're also not just for smaller accounts, because they also give, even if you can afford trading the bigger contracts, what I find great with the micros is you can fine tune your position size a lot better, and you can scale in, you can scale out. You can, especially at targets, all right, like let's say you could afford to trade one big copper contract. Well, you can afford to trade multiple micro contracts. So you can take off half your position at a key target area, which you can't do if you're trading one full contract. So even if you can afford to trade a full contract, I'll make the case that you trade the smaller contracts. It gives you a lot more flexibility. TikTok just going from their spies to our spies. I agree. What else have I missed? What else have I missed? So keep an eye also. Let's just peek in here. Then I'll look at the... Keep an eye. Apple has still not been able to fill this gap. It's still holding the rotation zone. You see here, it's not been able to get any traction. And even on a bounce, I'm still watching for the rollover play. But keep a close eye on Apple. Now let's take a look at the S&P going into the open. So, yeah, this 52 we're pulling back into the open. It's got some heavy lifting to do. So again, 52.32 area going into the open. But we could, again, be choppy. We've already put us in the 87.5 territory. I really can't get more bullish besides bounce plays unless we can really get above that 52.50 area with a decent tick. With a decent tick, I'll stress. Other than that, we'll be watching for that 52.50 as key resistance on any play up there, and the key support with those prior levels. And now, if we start getting a very negative tick, we'll find out in a minute, and we start breaking that 52.32, then I'll be looking back to that 52.20 area. And I'll be looking to see if we get any tick firming there. If we start breaking that, then we could turn into a momentum day down. COPX, copper. Didn't I get... Come on. Didn't that type in? Let's do it this way. Here's your COPX, the copper miners. And yeah, is a very interesting play. Especially if it holds this 39 level. It's coming into some major resistance, so that could be a very key area. But holding that 39 would be very interesting. And we talked about one of the reasons it popped up on copper yesterday with the China thing. Let's take a look at the tick. The tick, not that bad in opening. Not that bad in opening. By the way, yesterday afternoon, you see this huge spike down? Keep an eye. This was the largest sell program that has hit in quite a while. All right, this was the largest sell program since roughly back in middle of February. So I'm just going to be watching that to see if we get any more sell programs. But so far, it's a weak opening, but not a horrible opening. So I'm still going to be watching that 52.32, but this does not put me in anywhere in bullish mode yet. All right, I have to jump now into the open. I hope everyone has a wonderful day. By the way, if you haven't yet, please watch the replay from the trader session yesterday. And I shall talk to everyone later. Have a wonderful trading day. Bye for now.